Well, listen, I think the key message that we've given to clients is that the UK is approaching a moment of clarity. So there's no longer any appetite to keep kicking the can down the road. Now, we don't think that clarity is going to be a deal by October 31st, so some of that optimism probably needs to be faded, but you're probably going to have a general election in late November, early December. That general election won't quite be a referendum around Brexit, but it'll be close to it. So we're getting to a point where you need to look a little bit more objectively on UK assets. So we're not quite as negative as we were in recent months, but you may want to fade a little bit of this optimism heading into October 31st.
Given that we are still looking at a potential period of, from now until January of uncertainty, how do you actually make money out of this trade, given so many traders, investors, companies are in a bit of a standstill, a holding pattern without much clarity on what to do?
Yeah, I think the currency has been the vehicle of choice around the political uncertainty. It's obviously quite low already. We'd probably be a little bit short going into January, but the volatility is coming down again. So currency volatility has been a very clear place to hedge your risks, and it feels like it needs to be higher over the next 3 to 4 months.
Now, earlier this morning on Squawk Box, the guest host, Sir Martin Sorrell, made the comment that Brexit is almost a sideshow for the European Union, given what's going on the trade front, and of course referencing the EU-US trade spat. Does that make sense to you from a European perspective?
It doesn't, because I think there's too much weight on the weakness in European industry being placed on the trade war. The truth is, Europe's industrial weakness is a lot of things, and actually the UK is part of it. If you look at the drop in euro area exports, almost 50% of that is attributed to the UK. So it does matter. The UK is no longer a political sideshow. It's an economic drag on the European Union as well.
It's a great point, especially when you look at Germany and the export downturn that they've seen, that a good portion of that is actually due to Brexit or due to a downturn in the UK, yes, as opposed to China. So what does that make you feel about the outlook for Europe and perhaps more specifically Germany?
Yeah, so we've made very clear all year that the industrial weakness in Germany is going to be persistent, that it's a lot more than just the trade war. And I think the interesting point is that the more it persists, the more likely we have this fiscal policy discussion. So the big change in my mind is that from a policy stimulus point of view, next year is going to be all about fiscal stimulus and less about monetary stimulus.
That's the hope of many investors.
That's right.
But I mean, is that really realistic to bank on that at this stage, given the rhetoric we've heard come out of the likes of Germany?
Well, I think that when you look at rate of change, 3 months ago, most of the German political circles said, no way, there's nothing wrong. And if you listen to what you're hearing today, there's much more open-mindedness to maybe we need to do something. So it's never going to happen in warp speed, but things are changing very quickly.
Now, we're just circling back to Brexit, and from a European perspective, there's the argument out there that Europe has the same, if not more, to lose in a no-deal Brexit scenario, certainly in pockets of the European economy than the UK does. I mean, how do you think about that in terms of a negotiating strategy? We just heard there around the Europeans sticking by Leo Varadkar in Ireland. But do you think when it comes down to it, the Europeans will actually change their stance given how much they have at stake here? Well,
listen, I think both the UK and the EU have lots at stake, but the numbers are pretty clear. 60% of UK trade goes to the European Union, 10% of European Union trade goes to the UK. So the stakes are much higher for the UK than they are for the EU.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.